Welcome back to another episode of In Focus with Haversine Funding. Today I'm joined with our co-host, Jeff Whaley. Jeff?
Thanks for having me.
Yeah, thanks for joining us again. I'm always happy to drag you back. And we have a special guest, Paul Schuldiner. Paul, you started your career as a public accountant, now have a little over 35 years in the commercial lending space, and you currently sit as Rosenthal Rosenthal's Chief Lending Officer. Paul, thank you so much for joining us today.
My pleasure. Thank you for having me. Great to be here. When you say 35 years, I feel like I'm aging rapidly.
It just goes to show your expertise. You are a figure in the space. You're a leader in the space. Someone I can look up to. So I really appreciate you having us on. Paul, you have an interesting journey. Can you kind of walk us through sort of how you got into this industry and kind of even your career before that and what led you to where you are today?
Sure, it'd be my pleasure. So I started out after college. During college, I guess I got my degree in accounting. In the thought process of public accounting was very interesting to me. I worked in my last year of college. I worked for a small CPA firm just to kind of sort of gain some experience and just to see what the day-to-day activities would be. And I subsequently joined a fairly large firm located in New York City, where I started my career. Stayed there for 3 years. Got a very well background understanding of the audit and financial reporting process. I thought my career was going to be in the real estate sector, as I had a lot of real estate clients, and I was prepared to make a move. And I was literally out to lunch with a friend of mine who worked at the firm. And when I told him I was thinking about leaving, he says, "Well, it's funny you said that. My father-in-law, he's from South Africa. He runs a division of a trading company that does this form of lending, a lot in the apparel space, and he's looking to hire a CPA because he happened to be a CPA himself, who he can train in this lending." And when I heard apparel, I was like, I wasn't really that excited about it, but given it was a close friend, I decided to go for the interview, and I did. And it was obviously life-changing experience for me. When I heard what this lending was, called asset-based lending and factoring, I said, this sounds very, very interesting. It was also challenging if you were interested in getting into the lending world. It was very hard to get into a bank credit training program without having an MBA. I did not have one. I had a CPA. I sat for the exam, passed the exam, and I thought this would be a great segue to really get into lending, learn more about working with small to lower middle market companies. And I ended up taking that job, and I ended up in the asset-based lending, factoring, and learning about PO financing along the way, while I was about a 7-year tenure in that position, because I had clients who had to use PO financing. And that was really the foundation of my getting involved. And basically, I did it from beginning to end. I did field exams. I did collateral analysis. I did account executive work. Slowly started to migrate into doing some new business and networking and getting out and building a network. And that's where it all kind of started for me, before I segued into purchase order financing as a separate product. Kind of the same thing. I got approached by a group out of Chicago, a company called Transcap, a couple of ex-Deloitte & Touche partners who had developed this purchase order financing product for the Midwest, based in the Midwest. And I had some experience in dealing with PO financing on the East Coast, and they were looking to hire somebody on the East Coast to develop a market and help them build the business. And ultimately, I decided that this would be a great opportunity to be really focused on a particular niche that I thought was underserved, that was exciting. International trade was just blossoming, and this type of product, I thought it could make a dent and really be kind of become maybe a large fish in a small pond. And that's really what ultimately happened. I became a partner in that business, and my partners and I sold the business in 1990. In 2008, we sold the business to Wells Fargo. And I basically stayed at Wells Fargo, helped them build up the business further. And I decided, though, I wanted to get back into working with an entrepreneurial organization. I joined a friendly competitor, King Trade, where I kind of did the same thing. I joined as a sub-debt investor in the business, and I helped them build up the practice, particularly nationwide, but focusing on the East Coast. And then stayed there until the point that I had done business with Rosenthal and Rosenthal for many years when they did not have a purchase order financing product. So when they needed PO financing, they were always gracious enough to call and bring us into a transaction. I got to know the senior management team and the family, and they approached me with the ideas that they were interested in starting a PO financing division to round out their product line, particularly as it relates to factoring. And I decided it would be a great move, a great opportunity to kind of build something from scratch again. And I brought one of my colleagues with me that worked with me both at Transcap and Wells Fargo. We came and built that up. And then probably about 2 years ago, my role started to change. The company, because of my background in ABL, factoring, and PO, asked for my thoughts on where I thought the business was going as a whole, and it morphed into the current role, Chief Lending Officer, where I'm involved in portfolio at a high level. I'm involved in new business initiatives, the marketing, strategy as it relates to credit and our offerings, and building new product lines for the business and acquisition. So it sort of kind of brought my career full circle of all the different facets I've been involved in. And today I find it's really invigorating, challenging, and I couldn't enjoy what I do anymore.
That's awesome.
Than I do.
I have to say, as a fellow CPA and someone, a veteran of public accounting, it warms my heart to hear another CPA success story. So that's great.
Yeah,
It's weird. Like I said, I enjoyed public accounting. If you don't go back for your MBA and go through a credit training program, working in public accounting is a great foundation for the asset-based lending world in particular.
Yeah, we come across that somewhat often. That's kind of the foundation for a lot of people in our industry. Paul, that's an incredible journey. You'd mentioned that you thought you could be a big fish in a small pond. Well, thanks to you, that pond has grown quite a bit, I could say. And you were still definitely a big fish. You've been eating in that pond for quite a while. You've contributed to the growth of purchase order financing and the acceptance of it. For some of our viewers and listeners, can you kind of back up a little bit and walk us through what is purchase order financing and what a structure of PO financing looks like?
Sure. So purchase order financing, it has to be really thought of as a bridge finance tool. It is not meant to be a working capital product that's used on a let's call it as part of an ongoing need. It supplements or is an alternative to a company raising more permanent capital, and where a company that is focused on it's focused more on it's an inventory finance product. So a lot of people will hear PO financing, says I got a PO, and you find out it's a service oriented business. PO financing is really designed for importers, distributors, light manufacturing, and assembly businesses that are growing or through a turnaround possibly. They don't have sufficient open credit with their suppliers or availability under the traditional form of financing, whether that's factoring, asset-based lending, or traditional commercial bank loan. But they do have orders, contracts that are enabling the company either to facilitate the turnaround, or if it's a rapid growth trajectory, they need to be able to buy what we would call pre-sold inventory. And really pre-sold inventory is where there's a finite known home for these goods, and that on a transactional basis where you will buy the goods for the company. You will pay for the goods if the goods are coming from overseas. You can use letters of credit. You could use documents against payments and pay cash when the goods hit the water. If it's a domestically produced product, you could provide purchase guarantees. You could also use your own credit to buy goods because basically your client is standing in your shoes using your credit to buy the goods. So there's a lot of ways to do it. We find that obviously the gross margin has to make sense. Usually A PO financer will provide 100% advance rate on the cost of the required goods, provided the gross margin usually is in the area of 25% plus or minus.
Yeah.
Typically, most PO financiers have been usually involved in finished goods transactions, so that revolves around a lot around import and distribution. But production financing or work in process financing, that is also a needed tool for, again, light manufacturing businesses, assembly businesses here in the U.S. And the key there is the goods and the transactions that we're seeking to finance really need to be incremental sales. Production financing, you're looking at basically 13-week transaction cycles, probably not more than that, because once it goes longer than that, the transactions are probably far too complicated from a manufacturing standpoint for our ability to underwrite in a PO finance transaction. So it's really, again, it's a great tool for companies, particularly closely held entrepreneurs who have the opportunity to grow or, again, affect the turnaround and don't necessarily want to give away equity at that time, either due to the valuation or for other protective reasons. Maybe it's a family business, and so it's been an interesting journey, particularly in when global trade expanded and imports came from China to big box retailers. I think that's where PO financing really jettisoned as a product.
Well, I mean, it's interesting. And one of the questions when we were talking and changing gears a little bit more, and I think what your answer kind of leads into the next question pretty seamlessly, is that, one of the exciting things about talking to you and your place in the industry at Rosenthal and Rosenthal is, the variety of products you offer and the fact that y'all are not just domestic, but you engage in a lot of international transactions as well. And so having said all that, a lot's been going on. I mean, the only constant really in our industry has changed, and especially over the past couple of years, it feels like the pace of change in the industry has accelerated. I mean, given the rise of fintech, especially very, very recently, changes in global trade patterns. I guess all of that leads to the question: what do you feel like are the most important trends that are affecting the asset-based industry right now? Where are you seeing that's really fascinating or something that bears watching?
So I'm a big believer in a couple of different things that I think are relevant trends for the future. One, I'm a big passionate about international trade, global trade. Yep. I think what we learned from, in particular from COVID and the aftermath, is that we are totally interconnected on a global basis.
Very true.
I think that asset-based lending, factoring, and the like, trade finance tools, that I think ultimately, and I think technology has a lot to do with it, and data, is we're going to find much more cross-border asset-based lending, factoring for businesses of all types, sizes, and shape. And I think technology is going to help facilitate this, not totally be the reason, but I think the asset-based lender or factor of the future is going to have to feel very comfortable looking beyond the borders of the United States as a method of providing financing.
So that's really interesting. Technology is such a huge hot word right now with so many advancements that we're seeing, especially in our industry. I think our industry is a little bit delayed in adapting some of the changes. So it's awesome seeing how new softwares, new products. I hate to throw out this word, but the AI, that people are incorporating, it's having a real day-to-day impact on our business with automations and just being even able to underwrite deals or learn trends and repeat businesses. So it's really interesting. I'm excited to see how it's going to really impact our industry in the next 5 to 10 years, because I think it's going to shake things up. I was doing a little bit of research beforehand, and what's funny is I saw an interview that you did, another web interview 3 years ago, and the topic was how borrowers and lenders alike navigate today's times, and this was 3 years ago. Fast forward to today, as Jeff said, the only constant is change. I feel like our industry has just been in a shakeup. So fast forwarding 3 years now, what are some of the challenges that you see borrowers and lenders facing with the rising inflation and interest rates, What are you dealing with on a day-to-day, and how's it impacting borrowers and lenders?
A couple things. Well, first, let's start with that. There is an incredible abundance of liquidity in our world. That has tremendous impact to businesses. I think what we're finding from inflation and globalization, and where we've been, say, in the last 5 years, is I find that the biggest challenges for businesses are, overhead can be managed, and that's in direct control, I think, of a business to a large degree. But what I find is the gross margin compression, and that has a tremendous impact to a business. And I think it's one of the challenges of how to maintain margins wherever you operate, whether you're a manufacturer, distributor, even a service company, how you price. I think that liquidity, or the abundance of liquidity, some of it very good liquidity, some of it not very good, because it's not structured correctly.
Correct.
I think it is kick the can down the road for a lot of businesses that probably should have been restructured or failed and have gone away, but has kind of kicked that can, as I said, down the road, and has basically used what's called this abundance of liquidity to mask problems that probably should have been addressed a lot earlier in the business cycle. And I think that's definitely something I've seen. And that's, again, liquidity needs to find a home, needs to be put to work. And it depends on who the stakeholders are behind the liquidity. I think, different stakeholders have different requirements, different return requirements, different growth requirements. And sometimes I think certain lenders and certain forms of liquidity step out of a sound structure because they're under pressure to lend deeper and to employ capital. And I think that can be detrimental ultimately to companies who are just not operating properly.
No, I think that's a good point. I mean, especially your point about not all liquidity is created equal, I think is a very important point. I think structure is the devil in the details that I think gets missed a lot. I think the other question I would ask is, from talking about your career and what you've been doing at Rosenthal, it's really impressive. You've been at the middle of basically kind of every trend, a lot of the trends that have been going on in larger industries. So, given a lot of the new products and the new ventures that you are doing at Rosenthal, and you alluded to that earlier, what is there that you're doing that excites you? What are the new things you're doing that are really interesting and kind of invigorating to you right now?
I think there's a couple of very interesting things. One is obviously the expansion of our recourse factoring business. Rosenthal had been primarily known for during its 85-year history. We are the largest privately held factoring company in the U.S., but that has traditionally meant, for us, non-recourse, and the preponderance of our business has been companies that are consumer goods companies that sell product into a retail channel of distribution. And they look for the credit protection, they look for the accounts receivable administration, the outsourcing, the collection efforts, and the processing. And that's been kind of the core of our business for many years. The recourse business, which we started in January of 2023, that was one area that I felt strongly and passionately about, that while we have companies that fit our asset-based lending model, there are companies in between the asset-based lending world and then outside of our non-recourse that fit a recourse model. Companies that are in janitorial services, commercial landscaping, staffing businesses, pharmaceutical manufacturing, businesses that are maybe emerging, earlier stage, not a startup, but earlier stage, or turnaround story, that have good receivables, good debtors, and it's a different underwriting, as you all know. It's a different underwriting. It's a different way to manage accounts. But I'm excited to see that growth because it enables Rosenthal to get into other industries that we've traditionally not been in, and also it facilitates our ability to help these companies graduate to that base lending potentially. And gives us definitely a stickier relationship with that client and a longer runway. So I'm very excited about that. I'm excited about our pipeline division, which is our emerging brand inventory finance, primarily for direct-to-consumer companies. I would say what we've learned along the way is
Oh, wow.
we developed that product in response to the COVID world and people doing more online business more and more. What we found is over time, it's sort of the landscape has kind of shifted, back to a combination of DTC and what I would call traditional brick and mortar. And I think our pipeline division addresses the needs of, let's call it, family office backed, venture capital backed, or private equity backed companies that are got a great brand, potentially are sort of orphans in the financial structure because they maybe not bankable. The equity doesn't want to put more equity in, and they really need that inventory finance tool to help them grow and then break into some of these larger retailers, which is their ultimate plan. So very excited about that. International factoring silo, which we've started as well. We recently obtained EXIM delegated authority, so we can offer a combination of EXIM or international factoring, which helps companies that are exporting have foreign receivables that maybe other lenders would consider not to be eligible within a borrowing base. And we can do a carve out and an intercreditor, work in tandem with other lenders, just as we do with purchase order financing, which has always been a product that not only that we do for Rosenthal customers, but again, we work with other lenders all the time. It's something that I've kind of built my career on. So I believe that collaboration and relationships and bringing our strengths to the table in conjunction with other lenders who have different strengths provides a compelling solution for prospects who ultimately we'd like to all of us to become clients.
Yeah. That definitely sounds like a lot of exciting things. One thing, I have to applaud you and, Rosenthal is you really kind of gauge what the market need is. And it seems like throughout your career, you've tried to build a solution around how can we fix this challenge that borrowers are facing today, and you kind of adapt to it. So rolling into my next question, if you had a crystal ball and you were looking ahead 5 to 10 years, where do you see the commercial lending landscape? Do you see any significant changes, any possible new products? It's a very broad question, but I'd love to kind of pick your mind and see if you could tap into your crystal ball and what the prediction says.
I think there's a couple of different things. I'm intrigued about equipment leasing, equipment finance. I'm intrigued to see if that's a product that can be further utilized and work in tandem with an asset-based lending product to offer, again, a complete solution to a borrower's needs, particularly in the manufacturing space. I think, we've read a lot about onshoring or nearshoring and now reemerging onshoring for manufacturing businesses. I'm intrigued that there may be a need for, not that there's not enough equipment financing, there's plenty of players in that space, but I think being able to offer a complete solution is compelling and something of interest to me. I think back to, again, crystal ball, again, globalization, international trade. Our world is totally connected. Supply chain finance, I would embed that into an area of financing international trade. I think supply chain finance is a product that, while at one time was very much geared to larger companies dealing in the investment grade space, I see that product continuing to kind of filter down into what I would call the lower end of the middle market. I think we're going to see more opportunity in that space. And again, particularly with technology improvements, digitization of trade documents, combining with integrating logistics providers within a financing structure. I think a lot of exciting developments are going to happen and are going to, again, enable long-term, not going to happen tomorrow, because I think you got to deal with certain legal issues, among countries and continents even. I think you need, but I firmly believe that in the future, probably well after I'm gone, I see asset-based lending, the reticence about doing cross-border financing is going to lessen. I think you're going to have to be able to adapt to do that in front of our business.
Yeah, I mean, I hope that, I hope that's the case because, anything is for me, when I look at the world macroeconomically, anything that allows us to lower that transaction cost of doing business overseas, I think societally is a huge net positive for all of us. So I'm definitely hopeful that the environment for international trade continues to be strong and improves over time, because that would be a wonderful gift
Yeah,
to us economically.
yeah. Yeah, I'm not listening. I don't mean to bring political points in, but what I firmly believe, if we're connected economically, the more we're connected, interconnected economically, it helps. You have to sit at the table and sort of the politics have to go to the side
Right.
to a large degree. You're creating value. You're creating economic value amongst parties. Um, I think the more that you can do in trade, I think it's critical. I think like you said, lowering the cost of doing financing, making it more efficient. Um, all those things, I think, again, further integrate us to one another, and I think it potentially lessens some other problems that we all see in the world today.
No, I agree. I mean, that's the hope, is that obviously, not to get too philosophical with what we do here, but the ability to build that interconnectedness and those relationships. I mean, it obviously, you would hope, the theory is, lessens the risk of political of conflict, essentially. Kinetic conflict. And I mean, you basically turn that energy more into economic competition as opposed to political or military competition.
Well said.
Well, one last question I would have, and again, this is going to be more of a personal question about you, and it's interesting to me, especially because you and I definitely started our careers in very similar spots. But what would you suggest as if you're talking to if someone who is just a recent college graduate watching this presentation, what would you give them as advice? To be successful in their careers and advance and not just be successful economically or financially, but really get a career that, like you mentioned earlier, excites and invigorates them.
Well, the first thing I would recommend is, obviously, it depends on what you want to do, whether you have, obviously a business background or non-business background. Firstly, I would encourage anybody to make sure they've taken certainly at least a couple of business related courses, as they go out into the world, no matter what they end up doing, whether it's this industry or not this industry. But as it relates to this industry, I think there's no easy path. It requires elbow grease, hard work, sacrifice. In order to advance, I think that you got to make sure that you have in this business, that you have the foundation. You have to start. It's very hard to really, really succeed without really having the basics. You've got to understand our business to a large degree still remains blocking and tackling. If you can understand how the collateral, how collateral is created, what's the basis of creating the collateral, how does the collateral perform, understanding the economic environment that a company operates in. I think that, and I have this conversation with our team frequently, and I sort of got it beaten into me over time. I was one of those people that when I bring a deal to credit committee, my investment committee, and I particularly when I thought I was well prepared, ready to go, because I had all the answers on the collateral, but I didn't necessarily have the answers and a deeper understanding to what makes the prospect's business tick. What is it? What is their reason for existing? And we can all say we develop liquidation strategies. We understand how to liquidate collateral. But if you understand how the business that you're financing truly works and what the goals of the ownership or management team of that client is, I think that makes you a better lender, a better understanding. And you can, whether you're underwriting a deal, whether you're managing a deal as an account executive, or you're trying to bring a prospect in as a new business person, I think having that, again, fundamentals in what we do, combined with an understanding of why the business has a reason to exist that you want to finance, I think that really enables company that. And I would say my last comment would be, that's pretty critical, but also developing a network, a viable network. You can't start early enough in your career. Again, when I talk about elbow grease and hard work, yeah, you might be out several nights a week. There's sacrifices that we all make in building a career. But I would say the network development is, I think, crucial to, number one, you exchanging ideas, working alongside like organizations like that, our trade industry organizations. I could tell you, I started out as an officer in the different chapters and at the national level, and I would tell you, I learned so much from those because of the interaction with other industry colleagues who teach me much more than I teach them. And that's why I consider this business to be a constant learning and evolving. And that's what interests me. And I think that if you decide to make a career in this business, those are the ideas and thoughts that I would have that ultimately I think can enable one to be successful.
Yeah, I think that message about success requiring sacrifice is probably one that's not internalized by enough people, but I think it's a little bit out of vogue. So I think that's really always an important message to reiterate to someone young, is that there's going to be sacrifice involved to get to where you want to get to where you want to go.
Yeah, I could sit here and pick your brain all day, Paul. I really appreciate you for joining us, dropping so many gems. Jeff, thank you so much for being my co-host today.
Thanks for letting me out with my cubby. I appreciate it. It's nice to get out every so often.
Yeah. Paul, for our viewers and listeners, where can they find you?
You can find me, Paul Schuldiner, Rosenthal Rosenthal. My phone is 212-356-1703. My email address is pschuldiner, PSCHULDINER @rosenthalinc.com.
Fantastic.
Yeah, thank you so much for that, Paul. It's been a pleasure.
Thank you.
It's been a pleasure. Allowing us to kind of sit through and hear your journey and everything that you've taken in that's contributed to the success that you have today, as well as your insight on what you predict the future. I know our viewers and listeners are really going to appreciate it. I've been excited for this one for quite some time. I'm your host, Nolan Reichert. Until next time, stay informed, stay inspired, and stay on course to growing your financial platform. We're in focus with Haversine Funding.